g'day there everybody. Thanks a lot for joining me as of this Wednesday afternoon market recap. This is the chart of the Nasdaq currently on my screen. Today we closed up just under 90 points, but what is more important at the moment is that this correction, at least through to the intra-session lows on Monday, does appear to be, albeit a little bit premature at this point, appear to be actually stabilizing, all right, right around this past swing low over here in the month of March, if I can zoom on out and show you this, and also potentially putting in that of a reversal. Now, again, it is a little bit premature. If I flick on over into these longer term simple moving averages, you can see that we had a rough target down here at 7,506. Is this the end of the correction? Again, too early to tell. However, if we flip on over into the oscillators, this is the daily time frame of the Stokes, the RSI, and the MACD. You can see that we have pushed on down into, relatively speaking, oversold territory, and we're already starting to see the adjustment take place on the RSI. It's only the fast line, really, at this point in time on the MACD that has pushed into negative territory. And if you pay attention to these histograms, you can see that we've had a deceleration, and now potentially we're moving back towards the midpoint of the histogram bars settings over here. So again, it looks as though short term we've put in a little bit of a bottom. This might just be the first sort of wave to the downside and a natural sort of bounce off from or out of, right, generally oversold conditions. But again, these markets, if I go to the weekly chart on the Nasdaq, you can see that they're pricing in essentially right now that of a hammer candlestick. Now, I understand that on the weekly time frame we are oversold, but these are longer term sell signals that, again, generally really only trigger once every couple of years. We can remain and linger up in this overbought, territory for a sort of indefinite period of time, whilst, of course, we are in the larger intermediate and also macro uptrend. So it's important. We were expecting the markets to actually close down on Monday, of course, after the continuation in trade sort of breakdowns that occurred after the close on Friday. We got that original sort of flush out of selling, but as it stands, you can see the buyers, again, continue to remain resilient, and as such, we're pushing off from those intra-session lows on Monday. We've stabilized not only on the equity markets, but the majority of our top 12 shares, although they did go through that of the correction that we have largely been in, of course, for the entirety of May, they're already starting to snap back and bounce off some of the key exponential moving averages. Now, again, that's a little bit of a segue into the exponential moving averages of the Nasdaq. You can see we're actually coming back up to retest as resistance, potentially that first major exponential moving average, that is the 50-day. You can see largely it is moving sideways. So what it's telling us is that we're actually range bound at the moment. It makes a lot of sense that we've got this resistance area up here at 8,100 and also this support area down here, as I've already recapped, being that of the March sort of swing low, down here at about 7,650. So as it stands, we're stuck at the moment between resistance and also most recently support. And we can simply just play the range right here indefinitely until either the swing low of Monday session breaks or, as I expect to happen ultimately over the coming weeks, if not months, the break of resistance as we continue to trend in the upward direction. All right. So a lot of this this sort of price action at the moment is driven, of course, by the updates in the trade talks. But again, it makes a lot of sense, technically speaking, one, for the markets to actually recalibrate and rebalance, to flush out a lot of those, or at least the overbought tendency in the nature of the market most recently. Again, we became rather cautious about this dating back a couple of months ago, really, but we saw the markets continue to climb up until the past two macro tops that we've priced in within the past 2 years. This is a very natural sort of correction. And again, we're not deviating whatsoever or diverging away from our initial analysis, is that this is very much so welcomed. And it's a little bit of a flush out to allow new buyers to show back up or to show back into the market and to reposition themselves for, again, the continuation of these macro trends high. Now, I just wanted to say that I received an email from my data provider when it comes to, obviously, my charting software. And there's a little bit of a corruption in the file of both the S&P 500 and the Dow Jones Industrial Averages at the close on Wednesday. So first of all, I just wanted to point out that I understand the candlestick itself is wrong. However, the actual price differential at the moment is correct. And there is going to be an update patch. They're working on it currently at the moment. But you can see at the moment, without taking into consideration the actual sort of candle composition itself, we closed up 16.55 points. Again, we're looking like we're sort of pricing in a rounded bottom. It's going to be interesting to see whether or not we can actually break below the swing low, taking us back to the late sort of period of March, and whether or not we're going to get follow through down to 2,700. Again, it's a little premature to say, but if you are sort of, again, just eking into, all right, or moving into positions over a prolonged period and playing the understanding that this market is moving higher above these all-time highs, if you hold and if you have enough, of course, option expiration, you're going to be paid off ultimately when the market chooses, all right, to rally above these swing points. You can see the RSI is adjusting. The Stokes is barely pushing into sort of oversold territory. And again, you're starting to see that sort of reversal take place, albeit sort of marginally at the moment, potentially anyway, showing up on that MACD. Now, again, the same is true for the Dow Jones Industrial Average. Don't pay attention to the individual candlestick. We closed up 115 points. This is looking quite good, albeit even if it is that of a temporary sort of support area, we are again moving into overbought, a quick adjustment of the RSI, and you're starting to see that lower sort of histogram bar as that Wednesday session, which appears to be the first histogram bar, which is going to decelerate back towards the neutral print of that histogram MACD setting as well, which is really just the separation between the fast and slow lines when it comes to the buy-sell signal. So again, it's quite interesting. We are technically showing up at a logical area of support. It's going to be interesting whether the bears can actually sell this market down below the swing lows. But again, if you're stepping into longer term trades, all right, you're going to be fine moving forward. A lot of these stocks, again, are bouncing off from logical areas of support. You've got Apple up $2.26 points today. However, we're nowhere near our 201.99 entry. Amazon is interesting. If I bring up the exponentials, you can see we're bouncing off from that 50-day. And again, we're just looking to trade this trend higher. You've got the breakdown in Boeing Airlines below 352, something that, again, personally didn't trade. This is technically counter trend. The trend itself is still to the upside. That's meant to be a cross, a very ugly cross. But as it stands, no vested positions in Boeing Airlines. But you can already see that this may be that sort of false whipsaw to the downside. And we've still got that bullish entry at 364.90. We've got Baidu moving into earnings. We'll skip over that. Caterpillar appears to be temporarily below the convergence of these multiple sort of decelerating fan lines at the moment, but we're still looking for a knee-jerk reaction when this seller finishes and expires to move on up above 132.42, which is going to be the initial entry point. You can see the rounding bottom also showing up on COP. 63.34 is that entry price to the upside with much higher targets. CVX is holding up relatively well. We've got that open gap, and again, this is another stock which appears to be, potentially making that move higher. The problem is that we've got gaps to the downside and also a resistance gap on the upside. So unless we see a major gap up on one of these sessions, which sort of opens above 124, which again could completely happen, that would be a reason to go long. Otherwise, I'd simply leave CVX for the time being. You've got Disney again bouncing off from its exponential moving averages. But before we do that, I expect these Bollinger Bands to sort of really wrap around price action before we get any meaningful move higher. You've got the bounce on Google. We've been looking at this and waiting for this after earnings to essentially price in the perimeter, right, of the move. First, we were looking at 1,150. We're not short Google, by the way. We're actually not short any individual stocks. We're just allowing them to shake off, blow off a little bit of steam to the downside, and then eventually, anyway, end up rallying above a lot of these breakdown points. But 1,202 is still that breakout entry. You've got IBM, which is still flirting around that 134 area. It's actually pushed on up above that 134.40, but it's still quite a distance away from our 137.39 entry. So again, a lot of this at the moment is just about patience, right? Netflix was looking, or at least it was on the brink of breaking out. It's pulled back, but it's also stabilizing and starting to move off from that 345 entry as well. So, sorry, not the 345 entry, but the 345 support area as well. So again, it's a little bit of a waiting game in these markets. If you look at where we are currently, we have to go all the way back to the month of February to actually be back at that similar area. And again, it's just offering you another opportunity to price back into the market as to where you may have been able to purchase it, right, about 2.5 months ago, right, if you go back and if you have that of a horizontal line. So think of it in that sort of dynamic. Again, I'm looking for major signals to show up, which is really going to alert us to an impending move, or at least a long-lasting, material sort of legitimate move. But as it stands, it's always good to see the market sort of stabilize, and we're just going to have to watch this and see whether or not, right, there's any legs to it, or if we do get a rejection of this level and actually come back down into these simple moving average areas. You can see my continuation entry on the NASDAQ, 7,979. If you want to learn about the analysis, however, jump on into that pro class, because we'll be breaking it down as we do each and every Saturday for roughly probably 90 minutes or so. We'll see what happens this week. But again, it's sort of been a week where we've sat on our hands and just allowed this market to more or less continue in its volatile ways. And we're looking for, again, a good support area if you haven't already. Otherwise, simply leg into it over each and every sort of couple of sessions. And we're just going to have to follow this prior to it, of course, breaking out. So make sure you've got those positions ready, adequate time, and allow the market to oscillate as much as it wants, and you'll be fine. All right. So on that note, everyone, going to sort of sign off on this Wednesday, and hopefully we'll get some interesting candlesticks to sort of close out the week on Thursday and Friday. All right. All the best, everyone. James signing off on behalf of Pivot Point Trading. Goodbye.